What's going on, traders? Jordan the Maestro in the building. We're back again with another video. I hope everyone is doing well. Listen, the first trading week of 2023 is officially over, and what a week it was. And let's go over the charts today to see how this week went, right? We remember last week we went over the gold chart. We're going to see how things ended up playing out. I'll show you some trades that I took, how I capitalized on those moves, and then we'll see what we could be looking forward to next week. All right. So if you recall, we're here on the gold chart, and last week we're just about in this area over here. Gold was creeping up to this area over here, right? To this area of resistance. And let me just zoom out so we can all get a better perspective of what we're looking at here. Let me go to a higher time frame so you guys get a great perspective of what I'm talking about. Reminder, okay? So gold was approaching this area of resistance, okay? This area of resistance right up here, right? This is where it was last week. So now let's drill down to lower time frames. Let's go to the 4-hour. And in the 4-hour now, we wanted to see if gold would respect the area of resistance and fall down, right? Give us a reversal to the downside, or if it would be able to break that area of resistance and continue up on giving us more buy opportunities, right? And it did, in fact, break that area of resistance that we saw over here, okay? So immediately, and this is important to note, immediately, once an area of support or resistance, or you call it supply demand, once an area of support and resistance is broken, then the bias, right? There's one confirmation left in order for the bias to be clear. What I'm looking for, right? My bias, because the area of resistance was broken, right? On the ups. So because my area of resistance was broken, my bias is now for buys. I hope that makes sense. Because this area of resistance was broken, my bias is now for buys. We're going to drill down to the 1 hour so we could, again, take a closer look at what was going on in the market. This area of resistance was broken. My bias is now for buys. And now what I'm looking for, very important, what I'm looking for is for a break and then a retest. Okay, so I got my break. Okay, area of resistance was broken. This was my break, right? Think of it, if you remember how I told you how the market moves in that video, how the market moves. We have an impulsive move, right, coming up. So what we're looking for next is then that correction. And when that correction comes, we're looking for that correction to not surpass the previous low, nowhere near the previous low, okay? So we have an impulse, we have a correction, and at the same time, where the correction ended up happening or where the correction ended up stopping was very important. When we want to enter in terms of the most effective entries to take a trade, especially coming out of a zone, one of the most effective ways to take a trade is by taking it in a break and a retest. Okay, we want to make sure that the market not only breaks, but it retests back to that area. Okay, so let me just add a note over here so those who are watching, we could just remember. So very important, we're looking for a break and retest. Okay, and this is what that looks like over here. We have a break of a zone, right? A break of a resistance zone, or a break of a supply zone. And then we want to retest that zone coming back on the opposite side, coming back, retest that zone. So now this zone that was once an area of resistance down here, okay, this area that was once an area of resistance turns now into an area of support. I hope that makes sense. This area, which was once an area of resistance previously for price, once broken, we're looking for it to we're looking for it to turn into an area of support. So now we have the impulsive move now retest this area of support. And now this over here is the area in which I took my first buy of the week for gold. Okay. This area over here was where I took my first buy for gold this week, and I was able to capitalize on that buy. I won that trade, and gold gave me 100 pips for that first trade of the week. Very simple. Simple break and retest strategy. Okay. Was patient. Did not just assume. Remember, the bias could easily be coming up to this area of resistance. The bias could easily be to just sell. But this is why you don't want to just be impulsive. This is a perfect example. Don't be so impulsive. Allow the market to give you what it's going to give you, and then you react based on what it gives you. The market did not want to give me that sell, right? The market instead broke through, gave me that buy, and then retested my area of previous resistance, turned into support now, and then I took off for the buy. Okay, so I took my buy trade, got my 100 pips. That was that. Now coming back, all the market did now. So if we're following, we now have our first low here. This was our low, right? All the market did was come up here to this area, and this area was also marked off as an area of resistance. Why? Because price came up here once, could not break past, and then came back up to this area and did not go past this area. Okay, so I immediately saw this area starting to be as an area of resistance. But price came up to this area, came back down to this area of support. Now, very important to note, although the wick of this candle went past our low, it still does not necessarily constitute as a solid break of the low. Okay, what we want to see and what we want to constitute as a solid break of the low is an actual solid candle, right? Or maybe more than one candle even, right? But at least one solid candle, and I'm talking about the body of the candlestick, right? This body of the candlestick has to break past this low, not just the wick. Very important that the body of the candlestick breaks past the low in order to disqualify the buy move. Okay, so it did not. Okay, so I knew the buy was still valid. This was just a retest. Okay, so as it retested this area, then we're looking for another opportunity for a buy. Okay, so here, if we go through the same process that we've been going through, right? We have a break, we have a retest, and then we buy, right? And then down here, although it was an aggressive candle, still respected our low. So it was just a retest, right? And then we went back up. Okay, this is a retest. Okay, so again, continuation, retest, and then we're looking for the continuation up. This was my second move of the week. Okay, my second move of the week was right over here, taking this buy, and I was able to capitalize on this move for another 100 pips. Okay, that was my goal. I saw the market was pretty much giving out 100 pips. It moved pretty well this week, and I expected that being the first week of the year. So I was definitely going for those intraday / swing type trades. Okay, so this buy went even more. All right, I captured 100, but it went far beyond 100 and even broke this area of resistance over here. Okay, so now as this, and again, another opportunity for entry. This could have been another opportunity for entry over here. Okay, so price broke past this area of resistance, came back and retested this area. And as it retested this area, you as a trader, you could have easily taken your buy in this area over here. That would be a valid trade. Okay, solid 80 pips, solid 85 pips, 86, however you want to count it. But that would be a valid trade. Okay, now this last trade I took for the week, this was more so an experience trade. Now, trading gold for a couple years now, I start to understand how gold is moving, especially when it wants to sell on the sell side. So immediately as I saw how the candlesticks were moving for gold, I immediately knew gold was going to give me a sell opportunity, and I was able to capitalize on this short sell over here. I was able to, so as gold was giving us that sell, I was able to capitalize on this move, made another 50 to 100 pips, you could say. And after that, to be honest, I was done. I was good to go. All right. The week was good for me. I knew that NFP news was coming. NFP news was coming, and I was looking forward to see how the market was going to react. But going into NFP and how the market did react, there was an interesting reaction that I thought I didn't necessarily expect for gold to give based on the NFP results. But when you look deeper into the data, it somewhat started to make sense, right? So with NFP, if we're looking on this chart, this was an aggressive sell that gold gave, right? You can call this an impulsive move down. And then gold gave us a correction to that move. So it's very likely, by technical standards, we can easily think that gold was going to give us a move downwards, right? We were looking and it lined up right in time for NFP. And it's easy to think that gold could have given us a move downwards for that continuation. But this is where you got to be careful when you trade news, okay? With news, all technicals go out the window sometimes with news, okay? Technicals may line up with news, and they probably will line up most of the time. But oftentimes, technicals can go out the window when it comes to news releases, because news releases could completely change the whole direction of the market. Okay, news releases are big indications of continuations towards one side, or you're definitely going to get a reversal towards the other side. It won't be like a small continuation or something like that. It's going to be a definite directional move, whether it's going to continue on that side very strongly, or it's going to give you a complete reversal to the other side very strongly. But that's the power of these news releases. So NFP numbers came out, and as they came out in a way for the dollar to be a lot stronger, right? So in actuality, there were a lot more jobs that were added to the economy. So that being said, we expected there to be a strong dollar, and we expected to see commodity weakness. Instead, we got a huge influx of buyers in the market during this time. And that could have easily, and I mean easily, taken out many, many traders due to that move. If you look a little deeper in the data, there's something called ISM manufacturing. And what that is it's a measure of how many products are being ordered in the economy, the measure of goods and services that are being ordered in the economy for different types of manufacturing businesses. And that number was pretty low, came out pretty negative. That being said, it definitely aided in the buyer pressure going the opposite way. But again, with the NFP, with NFP numbers, or it doesn't have to be NFP, it could be CPI or any kind of news, you don't necessarily know how the market is going to react, right? Based on the news, to be very honest with you, anybody, even myself, if I'm just trying to trade news, I would have thought that the market was going to give a sell in terms of gold. But this is why I don't trade on the initial output on news. Okay. Other traders may do that, and that's fine. But oftentimes you'll see, if you make it a habit of trading news, you're going to mess up your week's profits most of the time. You want to be very, very careful how you trade news. My personal preference, if I was going to trade on a news day, let the market react. And then from its reaction, you can capitalize on that. Okay. So what do I mean? So if I was going to capitalize on this move, let the market react. So this candle, this first candle, was a news candle, right? This candle over here was the initial release of the NFP numbers. Okay. So once me as a trader, once I saw that, then now I'm looking for an opportunity for a continuation on the buy. But before I could look for a continuation, if I have an impulsive move on the buy side and I'm looking to find a continuation, what comes before continuation? I need a retest. I need a retest, right? So I'm going to take a look at the retest. Now, let's go down to a lower time frame to see where the opportunity truly lied, right? As we are here on a lower time frame, all right, as we are here on a lower time frame, everything is starting to make sense, right? Allow the first initial minutes, whatever, 10 minutes, 30 minutes even, of the news release, let it happen. Let the market react. All right, the market showed you it's reacting towards the buy side. Now let market correct, okay? Let market correct, and this is where we take our buy, okay? So we had an impulsive move. This is the same thing I've been teaching. Impulsive move, a correction. If you really want to capitalize on this news move, this is the safest way to do it. You had a correction, and this is your buy opportunity. And what an opportunity it was. So if you wanted to capitalize on this news move, if you were patient, and this is the name of the game, if you were patient enough, you would have been able to catch an easy 200 pips in 30 minutes. An easy 200 pips in 30 minutes if you're patient enough to wait for the trade to give you what it needs to give you. I hope that makes sense, okay? There are many, many, many different indicators on how you could have taken this trade. You could have marked off previous areas. You could have marked off previous areas of resistance. Like, for instance, you could have marked off here. Like, this was a previous area of resistance. So this is going to give you an idea of where price is going to retest to, right? This was once an area of resistance. Whenever price breaks out of a zone, we want to see that it retests that zone. So that area of resistance should turn into support, comes back, retest that area, it turns it into support. This is your buy right over here. This is your buy entry right over here. 200 pips, 30 minutes. You capitalize on that, your day is done. Okay? 30 to 45 minutes. You capitalize on that, your day is done. Maybe your week is done off of one trade. That's how you really trade news. If you really want to trade news, you got to do things safe. You got to be smart. Patience is the name of the game in the market, and it takes time to build that. But over time, you'll really get an understanding that there's no FOMO really. The market is always going to give you an opportunity. The market is always going to move. But if you're patient enough, there's no way that you won't capitalize on a solid move in the market. All right. So in the week to come, so the market has decided that it's going along in the buy side, right? So if we take a look at the higher time frame, the market has given us an indication that buyers are extremely strong right now, okay? So what we are looking for, since we are on the buy side, what we are looking for is a continuation on the buy side, unless market gives us another reason to otherwise believe that it's going to reverse. But for right now, this is what we're looking at. If I'm marking up this chart for next week, I'm looking at this previous area of resistance that it gave me. I'm gonna swing that all the way across and pay attention to this area, okay? And I'm looking at where price currently is. Let me go down to a lower time frame. And I'm looking at what price is doing right here. So if price comes down a little bit more and respects this zone, this previous resistance turned into support, if it respects this zone over here, then I have an immediate opportunity for the buy side right over here. Okay. So in other words, I'm looking for price to come touch this zone and then give me an opportunity for a buy up here. If price were to break this zone, however, if price were to break the zone, there is still an opportunity for a buy. And why is that? Let me explain. Why is this still an opportunity for a buy? This was one big impulsive move, right? The true correction, right? If you drill down to a lower time frame, it could easily look like this is a correction. But when we're looking for our corrections, we want to look at it somewhere in the mid time frames, okay? Because we want our corrections to hold firm, to be true corrections, not like some 1 minute, 5 minute corrections, right? We want them to be true corrections. So if I'm looking for the true correction here, right, then the true correction is going to be, or if I'm looking for the true low, in other words, the true low is not going to be here. It's really right over here. The true low is more down here in this area. Okay. So that being said, price can come all the way down here and still take off for the buy because, all right, because the previous low has still not been broken. Okay. The previous low over here is not broken. So let's see what price does. If price corrects, and it may give us a pretty deep correction, especially since the market moves so aggressively on the buy side. But let's just say that price does give us that, okay? And we can use our Fibonacci tool to try to measure where we can expect the correction to go, okay? We're gonna use our Fibonacci tool, and as we use our Fibonacci tool, where do we see our golden ratio over here? Where do you see the golden ratio? This is what we're looking at, okay? So this correction to this zone lines up pretty well with our Fibonacci, gives us a nice area, potential reversal zone for gold to give us and then continue on to the buy side. In a future lesson, I'm going to go over Fibonacci and how to use Fibonacci. But one of the questions you may be having as I go through this markup is, okay, we know market gives us impulses. We know that market is going to give us a correction and then eventually give us a continuation. How do we know when the correction is over, though? In other words, how do we know when to enter or buy or sell, right? That's that magic question over there. And one of the tools that can help you measure where market could potentially end its correction is going to be Fibonacci. So you do want to read up on your Fibonacci. We will do a lesson on Fibonacci so that we can truly understand how we are measuring and how we are understanding where the market may end its correction. Okay, but basically, don't be surprised that if gold does not take off from this area of initial support over here, right? If it may give us a deeper correction, come up to this area and give us a takeoff to the buy side. All right, but right now I'm looking at a bias of buys right now to continue on with what it's giving us. Okay. Now, if the market reverses, it's the same thing all over again. So if we get an aggressive move down for any reason, then we're going to look for a retest. Okay, retest back to an area that was a potential zone, maybe a previous support area that's going to turn into resistance. And then we're going to look for our continuation down. Okay. All right. So in other words, so if we go to this 4 hour, if gold wants to be aggressive, let's just say gold wants to be aggressive towards the sell side, right? Let's say for any reason gold wants to be aggressive towards the sell side, it's no different, okay? Although we're giving our market predictions, what we see coming for the week ahead, the reality is the market could give us anything, but what's more important is knowing how to attack once the market gives us what it's given us, how to react. Right? How do we react based on what the market gives us? Let's say it doesn't give us that opportunity for a buy, gives us some deep correction for some reason, right? A deep correction. All I'm looking for, if I get some kind of deep correction, is just a retest to a previous area. Okay, retest to a previous zone, perhaps this previous zone, which was a support, and then I wanted to turn into a resistance, or this zone over here. But what I'm looking for is the same, okay, just the opposite way. All right, and then from that correction, then I want to enter and then take my sell. It depends what the market gives us, but ultimately what's our responsibility is knowing how we react based on what the market gives us. Okay, so guys, let's take a look at gold this week. In the week to come, let's see what it gives us. My bias is for the buy side, but we'll see what happens. The most important thing, be patient, allow the market to give you what it's going to give you, and then from the market acting, you are going to then react based on the information that is given to you. All right. So, all right, guys, I hope you have a great week trading. All right. Be sure that you are not over trading. Know when to stop. It's okay to stop even on a Wednesday. If you feel like if your goal for the week is to make 100 pips and you made 100 pips by Tuesday, good for you. Good for you. Then you don't have to trade for the rest of the week. Or if you really want to trade maybe one more day, 2 more days, take even half of what you were risking before, because right now is just cherries on top. Don't be greedy, right? Greed is one of the biggest reasons why we lose money in the market. A lot of us can actually make money in the market, but the problem is we're not able to keep money in the market. Okay, so let's challenge ourselves to be more patient. Let's not be greedy, and let's really take off and really implement these strategies in the week to come. All right, guys, take care. Jordan the Maestro, and I'm out.